Welcome back to Investing Talk Podcast.
Today we're looking at Rezolve AI. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay.
Look, for a lot of investors, what really matters right now is, well, momentum. And if you look at Rezolve AI, the story, the narrative, it feels overwhelmingly bullish. And this is really being driven by incredibly high investor confidence. It stems almost entirely from the recent, well, explosive price action.
Explosive is definitely the word. I mean, we've seen this massive surge, right? 59.1% increase over just the last 4 weeks.
Yeah.
And the stock closed recently, what, around 5.95 cents?
That's right.
That kind of short-term pop, it grabs everyone's attention. You know, the high-frequency folks, but also the long-term investors, because it just screams, hey, something fundamental might have shifted here.
And that's that's what the analysts seem to be pointing towards.
Okay, the analysts. What are they saying?
The consensus rating right now is actually a strong buy.
Wow, strong buy. In this sector, that's pretty rare.
It is. It's a powerful signal. But here's the real kicker, the true sign of conviction, maybe.
Yeah.
Analysts didn't just, confirm the current price. They recently hiked their price target by an almost eye-watering 105.72%.
Over 100% increase.
Yep. Pushing the expectation up towards $9.71.
Okay, so that signals a deep belief then that the future value of this AI solution is way beyond where it sits today.
Exactly. It suggests they think the fundamental value far exceeds the current market price.
It almost sounds too good to be true, frankly.
Yeah.
But, okay, when you look at the chart, do the technicals back this up, this analyst optimism?
They seem to, yeah. For listeners trying to learn, the stock is currently trading consistently above both its 50-day and its 200-day moving averages.
Right, and why is that so important? Explain that a bit.
Well, that's the technical confirmation, right? It tells us this isn't just market noise or like a short squeeze.
Okay.
When a stock gets above its 50-day moving average, that confirms short-term strength. But when it stays above the 200-day average, that's confirming a more robust, long-term upward trend.
Got it. So it suggests bigger money, institutional money maybe, is comfortable buying and holding.
Yeah.
They believe it'll keep going up.
That's the idea. It suggests they believe in sustained appreciation, not just a quick flip.
So what's the core engine here? What's driving all this faith? It can't just be happy chart lines and analyst hopes. What specific edge does Rezolve AI actually have?
Yeah, it really comes down to their market positioning. They aren't just doing, general AI for everything.
Right.
They have these unique generative AI solutions specifically tailored for the retail and e-commerce sectors, which are, let's face it, highly demanding.
Okay, so niche focus. Like what exactly?
Think personalized shopping experiences, dynamic pricing based on real-time data, seamless customer interactions across multiple channels.
Stuff retailers really need.
Exactly. Their ability to power these dynamic connections, what they call conversational commerce, it's crucial. And it seems to be driving this huge market demand for their platform right now.
So they're seen as a leader in applying AI right where the money changes hands.
Pretty much. That's the perception, and it's a powerful one.
Okay, that paints a really compelling picture. High momentum, strong analyst backing, cutting-edge tech, carving out a niche. Growth story, right? But this is where we have to pause, yeah?
Yeah.
Because the sources, they present this staggering contradiction.
They do.
You mentioned institutional money seems comfortable, but if we flip that coin,
Yeah.
the company's actual financial reality,
Yeah.
it tells a, well, frankly, terrifyingly distant story.
And this is the absolute crux of the investment decision. It really is. While the revenue growth looks good, it's compelling.
What was the number?
They reported a 29.46% increase in 2024, reaching $187,788 in revenue.
Okay, nearly $188,000.
Yeah.
Growing.
Yes, but that figure is absolutely dwarfed by their spending, their expenditures. The company is incurring just massive, massive high losses right now.
And those losses are the giant red flag, aren't they? The one every potential investor has to wrestle with.
Absolutely.
We aren't talking about a small operating loss here, like a startup finding its feet.
Yeah.
Their net income, it currently sits at a staggering negative $217.53 million.
Yeah. Negative $217 million.
I mean, they are burning through almost $250 million to generate less than $200,000 in reported revenue. How? How can the market justify a $1.42 billion valuation for a company with that kind of balance sheet? It seems wild.
Well, that is the ultimate paradox, isn't it? Especially in growth investing and particularly in the AI space right now.
So investors are just buying the dream, the future concept, not the current business.
Pretty much, they're buying the potential. That $217 million loss, in their eyes, maybe it's not just poor performance. Maybe it's the cost of aggressively buying market share, funding heavy R&D, building out that proprietary platform faster than anyone else can.
Scale over profit.
Exactly. Prioritizing scale and technological superiority over immediate profitability. But, and this is a huge but,
Yeah.
that enormous burn rate creates immense liquidity risk. Huge. It raises that critical question. How long can they keep this up without running out of cash or having to dilute shareholders like crazy?
And that liquidity concern, that's exactly what brought all the market scrutiny.
Right.
Which really seemed to crystallize with those short seller reports.
Precisely. Yeah, you might remember that highly critical report back in September 2025. It was from Fuzzy Panda Research.
I do. They went after the accounting, didn't they? Growth claims.
They did. Directly question some of their accounting practices and those growth claims. Now, Rezolve AI, they pushed back hard, publicly labeled the report misleading.
But the damage was done.
Well, it definitely temporarily spiked volatility and market vigilance. People started watching much more closely.
And connecting those huge losses directly to how investors felt. We saw major worries about profitability, about that long-term liquidity, surface earlier, didn't we? Back in August 2025.
We did. That period was marked by a really sharp stock decline, remember, about 12.8%.
Right. So it shows just how fragile that investor trust can be when the financial numbers just don't seem to line up with the momentum story.
Exactly. And that negativity, that skepticism, it hasn't entirely vanished.
Still lingering.
Yeah. I mean, when a company spends this aggressively on growth, its accounting practices often end up under a microscope.
Makes sense.
So there is still, lingering market chatter, whispers about potential new short seller reports, maybe even class action announcements, looking into how they book revenue or handle expenses.
So that's a risk factor. Adds friction to that upward trend we talked about.
Absolutely. It's something that has to be factored into any investment decision here. It's not smooth sailing.
Yet, back to your point about the market cap, that $1.42 billion figure, that size, it does provide some kind of counterweight to the risk, doesn't it?
It does offer some flexibility.
It suggests that institutional belief, maybe it really is long-term focused. That size gives them room to make strategic investments, provides some runway, even with that crazy burn rate.
Right. They have access to capital markets that, smaller startups just don't.
Which brings us back to their operational success then. Because that has to be the justification for the massive valuation, right?
Right.
They're trying to prove the cash burn leads to real, defensible market dominance.
That's the entire narrative they need to sell.
Okay, let's tick off those wins. They recently announced they surpassed $50 billion in gross merchandise value, GMV. For the listener, GMV is basically the total value of all sales processed through their platform, hitting $50 billion. That means their AI solutions are handling real, huge volumes of commerce.
It's a massive benchmark for traction. It shows usage at scale.
Absolutely. And they're doing this through big clients, not just small shops. They reported back in August 2025, they now have over 50 major enterprise clients.
Right. These aren't just, mom and pop stores. These are large established companies integrating Rezolve AI's commerce tools. That's powerful validation. Shows the tech is reliable and scalable.
But the real, perhaps, game changer was those strategic partnerships they secured in September 2025. Alliances with tech giants, Microsoft and Google.
Huge names.
Are these just like press release partnerships? Or are they deep integrations?
From what we can tell, they appear pretty deep. These alliances are critical because they basically place Rezolve AI right at the heart of how enterprises are adopting AI. It means their tools get integrated into these ecosystems that, well, practically every major corporation already trusts and uses.
So that creates a moat. Harder for competitors to push them out.
A strong technological moat, yeah. Makes it much tougher for others to displace them.
And they weren't just signing partners, though. They went shopping in October 2025, right, to beef up the platform.
They did, an acquisition spree.
Completed the SmartPay asset acquisition for about $1.9 million plus shares. And they also bought a company called Subsquid.
Right. This tells us they're aggressively buying competence, plugging gaps. The SmartPay deal is focused squarely on payments.
Key in e-commerce.
Absolutely. In the e-commerce world, controlling that payment rail is often key to profitability and capturing valuable data. They paid a relatively small amount to instantly boost their payment infrastructure.
Okay, makes sense. And Subsquid. Sounds very technical. What does that bring to the table?
Subsquid is all about enhancing data connectivity.
Ah, data. The fuel for AI.
Exactly. In the generative AI space, the quality of your data, how easily you can access and use it, that's everything. Subsquid's tech likely helps them connect and process diverse data sets much more efficiently.
So making their AI models smarter and faster for clients.
That's the goal. It's really a foundational technology investment designed to keep that competitive edge and intelligence sharp.
And then finally, on the structural side, we saw that major institutional shareholder transfer announced in October 2025. That feels like a move to reassure the market, maybe stabilize the share price amidst all the scrutiny.
I think it was a very deliberate move. Yeah. Designed to strengthen their global institutional shareholder base.
How does that help?
Well, when large, stable investment funds are known to hold significant chunks of shares, it inherently boosts credibility. It can help manage volatility, provide better market liquidity. It's basically a strategic signal to the market saying, look, the smart money is actively involved here, trying to offset some of the fear generated by those short seller reports.
Okay, so summing up this part, we have this company fueled by like explosive momentum and real strategic operational wins. But at the same time, it's seriously hampered by these massive financial losses and persistent skepticism.
That's the tension.
So the entire investment case really rests on whether they can actually make that leap, right? Transition from just a cash-burning growth machine into a genuinely profitable platform.
That's the billion-dollar question, or rather the $1.4 billion question, given the market cap.
Okay, so looking ahead, what are the really high-stakes catalysts, the things coming up in the next, say, 3 months that could determine their fate?
All right, crunch time events. The immediate most critical one is the Q3 2025 earnings release. That's scheduled for January 10th, 2026.
Okay, Jan 10th. That date is everything then.
Pretty much. Expectations are incredibly high, not just for continued revenue growth, but specifically for management to address and ideally show a clear path toward mitigating those huge operating losses.
They have to deliver.
They have to deliver convincingly on their stated revenue milestones. That's needed to validate the current momentum. If they don't, well, the party could crash hard.
And beyond their own filings, there's the institutional calendar driving potential volatility too, right? You mentioned watching 2 dates.
Yes. We need to watch the institutional ETF rebalancing on October 31st, 2025, and then a major 13F filing deadline on December 2nd, 2025.
Okay, ETF rebalancing and 13F filings. What do those practically mean for the share price for someone listening?
So the ETF rebalancing, basically major index funds that track specific sectors like AI or e-commerce, they'll decide whether to add Rezolve AI, remove it, or change its weighting in their portfolios.
So big money flows.
Huge flows. If Rezolve AI gets included or heavily weighted, massive amounts of passive capital just flood into the stock, pushing the price up.
And if they get excluded?
Significant selling pressure can hit almost immediately. It's automatic buying or selling.
Got it. And the 13F filings.
Those filings reveal what the biggest hedge funds and institutional investors, the really big players, have been doing with their shares over the last quarter.
So we see who's buying and who's selling.
Exactly. If we see large, respected funds dumping their shares, it's a huge psychological blow, sends a bad signal. But if they're increasing their stake, it reinforces that bullish narrative we talked about.
So both days could cause big, unpredictable price swings.
Absolutely. Considerable volatility is almost guaranteed around those dates.
And then there's external data validation, right? Smack in the middle of all this. The Holiday Retail Trend Report release on November 15th, 2025. Why is that one critical?
Well, it gives external analysts and us a chance to see how Rezolve AI's solutions actually perform during the peak retail season. Are companies really using these conversational AI tools?
So real-world proof.
Yes. If the report shows strong adoption, strong penetration, it provides independent validation that their platform is actually dominating the market like they claim. It backs up the story.
Okay. And finally, we had to touch on the rumors, right? In a stock this volatile, speculation itself can be a catalyst.
Definitely. You have to pay attention to the whispers. One major rumor floating around suggests deeper, maybe even exclusive agreements with either Google or Microsoft could be announced soon.
Taking it beyond just a standard partnership.
Yeah, maybe something more foundational, more integrated. That would be huge news.
And then there's talk about the public sector.
Right. Speculation that Rezolve AI might be bidding for a large-scale government digital transformation contract, potentially in Europe.
Wow, landing a government contract like that?
Yeah.
That would lend immense credibility, wouldn't it?
Yeah.
Especially around security and scale, outside of just volatile retail.
Huge credibility boost.
Yeah.
And stability.
Plus, you mentioned the market is buzzing about more acquisitions.
Yeah, potential further fintech or data integration acquisitions as they keep building out that retail payment and data ecosystem.
So any of those rumors turning real could send the stock flying.
Could send it soaring overnight. But just as easily, if those Q3 earnings disappoint or a negative 13F filing drops, the downside risk is equally severe. It's a knife edge. So for you, the investor, here's the synthesis. Rezolve AI is an investment defined by immense duality. Really is. You have this explosive growth momentum, undeniable operational progress, real analyst optimism on one side, all driven by what seems to be a best-in-class generative AI product for its niche.
Okay, the bull case.
Right. But it is equally and heavily burdened by significant market-shaking losses and this ongoing scrutiny regarding profitability and their accounting practices on the other side.
It's bear case.
Exactly. The next 3 months, maybe 6, will determine everything. It's going to be shaped entirely by how well they execute on those financial disclosures and by these crucial institutional actions. The ultimate question you, the investor, must ask yourself is this. Given that $217 million annual cash burn, are you comfortable investing purely in the concept of AI market dominance? Or do you need to wait until they actually prove they can turn that cutting-edge technology into sustainable profit?